Our conditions bearish. Currently, we have majority bearish at 10 and 4 on the trend condition indicator. We're seeing that on the daily time frame for S&P 500. We're back to the 382 location. We tested that yesterday, and we're inside of this demand block as well. Remember, the demand block is an area of price where price activity has been before and pushed above to a new high, and we're inside of that location. So if demand is going to start to come, it's got to start to happen here pretty soon. We're seeing futures this morning down 1.5%, though. Let's take a look at that chart. Some potential acceleration here to the downside. So any of that rally here, we talked about that yesterday. Any rallies right here, we are extended in trend on the 60-minute time frame, and so this is, and we're also in an area inside of this demand block and a 382 counter trend location where we could get a bounce at these areas. But if we continue to see sliding, and if we get buying at the open, then that may bounce up and retest. Sorry, that number's a little bit small, but that's at 59.19, 59.20 on the upside for S&P 500. Essentially, that's right here on this 60-minute time frame. You can see right back inside of this range. So if we're moving lower currently, we were there yesterday, and if we get a bounce and move back up again, I'll be watching for that 59.20 range. That's also the bottom of the 382 retracement location, and majority bearish at 13 now, majority bearish at 14 on the 1 hour. We also saw really the breadth holding up just a little bit, still at 44. Again, that means 44% of stocks in the S&P 500 are trading below the 50-day moving averages, or trading above the 50-day. That means 60% are trading below. We've got majority bearish on the trend, and it's compressing and looking like it's wanting to continue this direction. We're seeing volatility also having a lot of a movement here towards the upper end of this range, as we've been seeing stocks selling off, volatility increasing, and expanded. So we could also see a little bit of a pause here in volatility. If we can get a pause here in the selling on equities, could get a bounce at this range also. But again, if we start to get some fear, some panic, or something that starts to spook the market here, that could drive this even higher. Let's take a look at SHY, short end of the yield curve. We're seeing bullishness here, majority bullish, a little bit of a pullback yesterday, adjusted that current trend on the 1 hour to 7 and 7. You can see with that price activity. So a little bit of a pause here on SHY, TLT, also working towards that overall uptrend, but getting a retracement inside of that overall uptrend here, pullback. Really, this is just a little different perspective. This is kind of the bigger picture. This is zooming into that bigger picture. And so we're working, back to majority bullish on TLT. What that looks like on the rates themselves, we're seeing 2-year continue to move lower. Even this morning, that's dropping back down again. 3.95 on the 2-year, 10-year 4.28, and majority bearish on yields as well. You can see how it's rallying back up, potentially testing the underside. So within the current trend here and here, as we're moving back, we start to break through some of these levels that are listed here. These are the Fibonacci zones. They can act as areas of supply and demand. Also, as we're seeing some interest happening here, retesting this, they can rally up, see if we get any resistance as it rolls back over, continuing with this overall downtrend that we're seeing in interest rates right now. Dow Jones Industrial Average sitting majority bearish at 9. And again, a little bit of a pullback. Futures are probably lower on that as well. Be watching for that 50% retracement on Dow. On Dow, DIA, we're covering the ETF, so we're primarily talking about that on these updates. 426 as support. That's the 382. So we're inside of we're at the corrective zone of the trend. So essentially, this orange line is connecting this and this. And then halfway back of that trend is right here, 50% retracement. This is a 38.2% retracement. Anything inside of this box is a counter trend corrective zone. So it's still bullish, meaning it could bounce from here. But the deeper we get into the corrective retracement, the harder it becomes. There's just more resistance for it to fight through, and ultimately there's going to be sellers at each of those locations. So we're seeing that, but we can see, and this move right here, I think this was kind of the Trump rally that happened. So he may have unwound all of his hype or at least the market's anticipation of his hype tariffs, and the shorter and the longer term perspective of tariffs. Also, the stock market is really still trying to digest that. Triple Qs, the tech names, seeing majority bearish here at 11. A little bit of a bounce here inside of that range. Again, more than likely just an extended counter trend bounce, but we could be wrong. The numbers are also not necessarily supporting a major bull rally at these levels. So caution is certainly warranted across the board. IWM, which is the Russell 2000, seeing similar type of format here. It's a little bit more aggressive to the downside, majority bearish on that. USO really falling off the table right here and dropping all the way back down to 70 and testing some of those more recent lows. See if we get any kind of strength there. It's certainly extended to the downside. You can see how far we're now extended in that shorter term trend versus compressed. Okay, these trend conditions give us context to the trend. Where are we at in the trend? Are we tight and compressed in the trend here? Are we shifting trends from down to up? Are we compressing the trend, or are we expanded in the trend? The shorter time frame on the 1 hour, we can see what's happening here on the daily as well. And obviously, that's just an additional visual representation of price. Price really is all that we really want to focus on, and that's moving moving lower on USO. Let's jump over a couple stock ideas that are getting some pops here. We're seeing SE, good confirmation bar, increased volume the last couple of days, back into the momentum zone, and a solid looking move there on SE, and another one to consider CDX. Excuse me, that wasn't the one I actually wanted. I wanted to go to CXDO. And another nice looking pattern, good confirmation. Earnings reports always help. Sometimes those fizzle quickly, but you get big volume coming into big demand and an early, the first pullback after confirmation. So we're squeezing here in the trend rally, first pullback, big confirmation bar after that first pullback, and could see some demand there as well. Again, market conditions may mute some of these trades as there just may not be, sellers may look for opportunities to be selling now instead of buying aggressively, but there's still going to be lots of opportunities specific names, even though markets are starting to pull back as a whole. And those are a couple for you to consider today. That'll do it for today's update. Everyone have a fantastic day today.